Ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. It's the first day of trading this week, but it's the last week of this month. Ladies and gentlemen, we are almost done with January. Honestly, it was just New Year. Now it's already end of the month. I mean, crazy, right? But honestly, what a month we had. However, I think I have been saying about every month in 2025, about like what kind of a month we had. I think since the beginning of 2025, every month has been just like crazy. So look, January has no exception. I'll talk about a few things here and there. However, we woke up today to many other news. We have Japan potential intervention into the FX market. We have still geopolitical tensions. We have tariffs flying all over the place. Honestly, crazy still. And yeah, look, we'll talk about hopefully most of the stuff. Hope you'll enjoy it, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Yes, the 26th of January. Let me just correct my camera here a little bit. So yes, the 26th of January 2026. I hope you're all having, fantastic start of Monday, because the Monday has started quite in a crazy way with a lot of news coming out. But in general, look, I hope you're all feeling nice and relaxed after the weekend, because this is what the weekends are for. You need to kind of relax. I mean, if you didn't relax, well, I mean, I hope you were doing something very, very important. Ladies and gentlemen, so yes, welcome to this session. We're going to talk markets. It's the last week of January. January has so far been a crazy month. We had a lot of things happening, honestly, from a bombing in one country and to economic forums where crazy stuff has been said. Yeah, like I said, it was all over the place. Tariffs thrown out everywhere, it's just a regular thing to do. So yeah, look, I mean, the markets are waiting for, now they're waiting for the Federal Reserve. What's going to happen this week? We're getting the interest rate decision by the Fed together with the BOC. We'll talk about all that in a bit, but yeah, let's see what's going to happen. Certainly, let's go through the markets. Let's go through the charts, economic calendar. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Yep. So also, yeah, of course. Good morning in the chat room. Good morning, everyone. There we go. Ladies and gentlemen, yes, I hope everybody's having a wonderful, like I said, a wonderful start of Monday. As always, I keep on reminding that this session is made for people who want to interact, or maybe you just want to grab a coffee and just kind of sit through, this show just to listen, what I have to say about the charts, about the markets. You might agree with me, you might not agree with me. That's absolutely fine, because everybody's entitled to an opinion, and that's what makes us, human. That's what makes us a little bit more interesting than AI. Came from far away, right? Anyway, ladies and gentlemen, so yes, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. By the way, if you noticed, I'm without glasses today, so but I can still see, don't worry. Yeah, ladies and gentlemen, economic calendar. Let's have a quick update on it. Let's refresh the page. So yeah, today is the 26th. Okay. Australia today. Australia's open. Japan, of course, hit the wires today, and everybody was talking about Japan. But you know what? I'll pick up on that in a moment. First, let me go through the economic calendar here. So Germany's IFO business climate's coming out. Somehow everybody's really kind of focused on that. Maybe because of the absence of major big economic data sets. apart from some, of course. So yeah, for business climate, we'll keep an eye on that one. The expectation is for a slightly higher number. Let's see. Then we do have today the Chicago Fed National Activity Index, durable goods orders, Dallas Fed Manufacturing Index. Now something to keep in mind as well. Just a few kind of potential market moving data sets which are going to be coming out today. Not, let's say, drastically or something, unless they really skew from their forecasts, but just something for the market to pick up on. Now going into Tuesday, the NAB business confidence from Australia coming out. So yes, this is going to be something interesting. Industrial profits. Now this is where, an interesting data set from China here. Maybe it will determine the sentiment as well, because if those are on the lower side and those, look at this, I mean, they're kind of balancing near zero. We were below zero last year in summer. But if it's going to fall again below zero, I mean, I think that this is where kind of it could be a little bit of a worrying moment that, China's not getting profits from their from state-owned industrial enterprises. So yeah. Okay, so ADP employment change weekly. Now we know that ADP delivers a monthly figure. We all know that, but after the U.S. government shut down last year, at the end of last year in October, ADP kind of came out and said, hey, we can provide, like a weekly number as well. And I think it's a good thing. I think it's a great thing. ADP has, ADP managed to shine, of course, in the, in the period when, everything was bad. But sometimes this is when you got this one chance to, oh my god, like honestly Eminem song is now popping into my head. So you have this one chance, take this opportunity. It's like once in a lifetime, right? But look, in a way, they got this opportunity. They got an opportunity to shine. Congratulations to them. I think they're now kind of, they stepped up a little bit. Before they were seen as like an additional thing nobody cares about, but still sometimes occasionally watches. But here now that I think that this is like where they've managed to raise their credibility a little bit because of the, thank you very much, U.S. government shutdown, which by the way is coming up as well. another one, potential one at the end of this week. Let's see if that's going to happen. It's going to be like a partial one. Nevertheless. Anyway, so yeah, we're keeping an eye on that ADP number. Then we're keeping an eye on the U.S. House Price Index together with the CB Consumer Confidence number, which is expected to tick up a little bit. Okay, let's see how that's going to play out. We have Lagarde speaking, as apparently here on the calendar I can see. We have Lagarde speaking. Well, I don't know if she's going to say something interesting, but it's always good to know, what such officials could say. Now jumping into Wednesday, CPI, Australia, yep, coming out, an inflation number, headline inflation number, 3.6 is the expected number. And we are, look, Australia is one of those economies that it kind of still is managing to hold on, and they're still kind of okay-ish, right? So if it does come out at 3.6, basically kind of puts it at the same level as their interest rate, which is currently at 3.6. So look, the fact is that they will then have to think that, hey, maybe it's time for a rate hike at some point if inflation does start getting out of hand. If in general it is slightly above their target, which is between 1 and 3%. So I think honestly I keep on mixing this up with New Zealand. One is like between 1 and 3, the other one's between 2 and 3 basically, and Australia is 2 and 3. There we go. So RBNZ is one between 1 and 3. There we go. So so it's, of course, it's not within the range, it's above the range, slightly above the range, and it kind of continues to push in that direction. Now, what does it mean? It means that maybe Australia could, see a rate hike. at some point, not this year most likely, unless inflation really creeps up and it starts getting out of hand, and yeah, then we could see maybe the RBA going actually for those rate hikes. Now, I talked about this for already like a couple of years now, that eventually inflation, interest rates will start picking up because inflation will pick up. And I think that this whole situation with tariffs, this thing started in April last year. We're kind of coming closer to a year of that. And there are effects, there are negative effects of that. And I think that people are not feeling that because a lot of retailers were absorbing the extra costs. But now I think the retailers are kind of getting enough of that, and I think they will unleash the the higher tariffs, higher tariff effects on the consumer. So I think it's coming, and I kept on talking about this, that you have a combo where you're gonna have like higher inflation. Your unemployment will start increasing because of AI, because jobs are getting taken away, and which will lead to eventually lower growth. And what do you have? Like, what does this combo mean? Exactly, stagflation. So that's where my issue arises, and I think that we could potentially be getting towards that. I might sound like a pessimist, but look, do we still have a longer path towards that? Yes, we do. Is that inevitable? I think so. But anyway, I might be wrong. Hey, who am I? Long story short, we're watching this inflation with these inflation numbers. We're 3.6. The forecast. Okay, look, if it comes out, let's say 3.7, 3.8, I think that would be a bit of a problem, I would say. Going further. So also Germany releasing another confidence number, GFK consumer confidence. Now, I'll remind you that today business climate. So we're getting that one, and then on Wednesday we're getting the GFK consumer confidence figure, which is expected to improve a little bit, but still it's in the negative zone. Of course, Wednesday is a big day because we're going to be getting BOC interest rate decision, and of course the Federal Reserve interest rate decision. Now, the first bank, the BOC is expected not to do anything. The Fed is also expected not to do anything. The CME Fed Watch tool right now is giving us a percentage probability of 97.2 that there's nothing's going to happen. But the one that I'm watching very much is this April one, right? I mean, look at this: 70% probability that nothing will happen before Jerome Powell leaves his throne, and which I understand why. I mean, initially we had this column here. We had putting it in simple terms, bigger than this column, and now look at this. I mean, this is where it is right now. So long story short, if you're getting attacked for, let's say, something that you do, and you believe that you're doing a good job, then initially, if you were thinking to give like a little gesture of or like give a little present, you're leaving present, where not you getting a present, but you would give a little leaving present. Now I think he's not going to give that present, and he's just going to say, okay, what, fair enough, you're attacking me, then I'm not going to give you a helping hand or something like that. So there we go. I think we're in this position right now. So long story short, if you're looking for some potential rate cuts, June, July, maybe. I think June could be an opportunity. Why? Because the new governor would come in. look, the way I see this, okay, this is gonna, again, only my view, and I might be wrong. So the way I see it, so a new governor steps in, a new chief goes in. He's appointed by the current U.S. leader. He gives, like one cut, two cuts, but then reality kicks in, and let's say inflation starts rallying, right? I mean, you would be seen as a very stupid governor unless you have a super crazy plan in place where lower rates will be helping you out, to lower down inflation. However, I don't think that at this point, some there are maybe cases. Don't get me wrong, but I think in this case, because it's a very conservative look and a conservative central bank in a way. So I think this is, like I said, to battle inflation, you would need to hike rates, right? And I think that for now, this model is the kind of the one, right? So if you imagine this, like a new governor comes in, he gives out like one or two interest rate cuts, and then let's say inflation starts picking up, and then what? You're going to continue cutting because one guy wants to see those cuts. No, because you're gonna probably switch on your brains, and you'll realize that you're actually here for the longer period, and you want to build up this this status, this credibility that you're actually an awesome governor, right? So whereas that the person who wants cuts from you will leave in 2 years. So but you're here for longer. So that's where I think the conflict could arise. This is where the conflict could start. And I think that eventually they will have to look into hiking, or maybe let's say staying flat for a longer period of time. Again, we'll see. We'll see. Of course, time will tell. But for now, of course, we're watching. But I'm really going to be curious to see what Jerome Powell is going to say during the press conference, because the interest rate decision, yeah, like I mean that's kind of a done deal. But if the Fed press conference goes and and he starts saying some crazy stuff in there, or kind of not. I mean, by crazy stuff, I mean coming back at the U.S. leader in order to kind of prove him a point or something. It's not a bad thing. However, it would be an interesting telenovela to watch further. Anyway, so yeah, we're keeping an eye on the Fed and the BOC on Wednesday. Thursday, we're jumping into Thursday, foreign bond investment. So a lot of things are sort of circulating in Japan right now. But like I said, I'll go into Nikkei in a bit. Yeah, we'll continue monitoring the political situation in Japan as well, and the situation with surrounding the BOJ. JGB purchases. There we go. We're gonna have some information here. Japan consumer confidence coming out as well. So something to watch out for. Currently, the expectation is for a higher number. Now, going further, European Union consumer confidence final number, economic sentiment. So these are quite important data sets for the Eurozone. Going further into the U.S., before the U.S. session, trade balances from Canada and the U.S. I mean, we know that these two right now are at a bit of a battle because Trump wants to impose 100% tariff on Canada because Canada decided to, not to listen, and which is fine, which is like honestly like a logical thing to do, and just kind of go and make some deals with China, because China is seen right now as the if you wanna, if you don't like them, you will go with them because maybe you don't like the other one more. So from the two devils, again devils again, maybe not devils, but from the two you choose not the best one, but the one who is annoying you less. Very simple. So then we're going to get initial and continuous jobless claims. From the U.S. And kind of that's it for Thursday. Now Friday, Japan, a bit of a data dump from Japan. Inflation, Tokyo core in the headline, CPIs, unemployment rate, industrial production, retail sales. So yeah, it's a bit of a construction orders, housing starts. Good stuff. Good stuff from Japan. Everything at once. You know what? Sometimes it's even actually okay. I think it's sometimes even better. That said, the data gets spread out in order to have bigger maybe volatility in the market. Okay, look further in down the line on Friday, nationwide housing prices and from the UK. Um, German unemployment numbers and German growth rate, GDP growth rates. So we're gonna see how that's gonna play out. But by the way, that's the estimates. That's the flash. So same story from the eurozone overall, from the European Union. Sorry, not the eurozone, but the European Union. We'll see how that shows up. German inflation numbers, preliminary numbers, U.S. core PPI, U.S. headline PPI. These are coming out as well. If you're looking for some data sets on before the U.S. opening bell, ladies and gentlemen, let's jump into Japan. Let's jump into Japan and let's jump into a daily chart. Now, Nikkei is lower today. Why? Look, over the weekend, in general, this morning I woke up to seeing like that everybody's talking about Japan, how Japan and the US are trying to intervene in the whole FX market because everybody needs to stabilize the Japanese yen, because that one was getting out of hand. Look, Nikkei is lower today, mainly due to the Japanese exporting companies. So, the cheaper the yen, the more attractive are the Japanese goods to the global arena and to the global consumer. So now, when you see that there's somebody's intervening into the FX world and trying to strengthen your currency, this of course will hit eventually the profits of those exporting Japanese exporters. There we go. So long story short, for now, I would say keep your eyes on the situation. It's not a finished thing yet, but it's a developing story. So anything can change in a way. Maybe just throwing out a phrase out there could be enough. So without like any major intervention, but I think it kind of smells something like that more. It smells something like that because it's very difficult to you want to stabilize the Japanese yen, but maybe you don't want to go for those rate hikes. So that's why there's maybe US is involved, because as much as the US maybe doesn't want to admit that they really they don't care. I mean, they maybe they're fine without the whole world and everything. Japan owns a lot of U.S. debt, and if Japan and it's another thing is like everybody's enjoying the whole carry trade where Japanese borrowers are borrowing money, which is with a lower interest rate, and then putting it somewhere in the West, like in the U.S. And earning an interest or earning profit basically on the interest rate difference. So. And that if that money starts coming out, because last week we saw Japanese bonds kind of rallying like crazy. So in a way, why do I need to put it somewhere else if at back home it's okay? It's still good. So that's where, like I said, I think that the U.S. quietly got scared a little bit of that, because if Japan starts pulling out funds, that's a problem. That is a problem. So hey, a joint statement, by the Japanese and U.S. maybe officials that they're gonna, will be ready to intervene into the FX world, that could calm down the depreciation of the Japanese yen. So that's where I'm saying that's why it's a very interesting move. Certainly, is it a publicity stunt? I don't know. Maybe they eventually will jump in. However, we're watching it very carefully. The situation is, like I said, is still developing. Maybe they will say, you know what, the intervention is not needed at this time. But then the question is like, has the Japanese yen stabilized or something, or what? So another thing is in the story is that if the U.S. goes into shutdown, I don't know. It seems like indices might actually feel the heat, and we could see a reversal in the stock market, in the global stock market, and this is where the Japanese yen could just gain gain and becomes a little bit stronger against its other major counterparts automatically, because everybody would be jumping into a safe haven, which is the Japanese yen and the Swiss franc. And this is, like I said, this is where the interesting bit comes in. And this whole phrase this whole thing that they threw out today, like I said, maybe it's just a little teaser to slow down the depreciation without the depreciation of the Japanese yen without actually going for those rate hikes. So, or maybe delaying the rate hike a little bit further. Just an idea, okay? Just an idea. Let's see how this is going to play out. But for now, looking at the technical picture, look, I think we might stay around in a range here somewhere. We might move sideways, so I'm not really in a rush here to do anything. I'm just observing the price action. If we want to go see higher levels, then yeah, 54,500 could be a nice good target. But if we do clear this 52,636 territory right here, roughly, then actually, it's not exactly the level, it's the area around that level. And maybe somebody was, 52,500 as well could be. So in general, 52.5 zone, 52,500 zone, then yeah, if we clear that one, then I will consider a larger correction back down. Shanghai Composite. Shanghai Composite is interesting. I want to say, it's trying to show weakness, but it's not. Is it trying to show strength? It's not. So we're kind of stuck. I think we're waiting for the next move on the global market to see what's going to happen. Are we going to see Iran getting struck? If so, then that could actually bring the Shanghai Composite a little bit lower, because again, we know that China depends a lot on cheaper Iran oil. If we see a strike of some sort on Iran, then yeah, this is where a bit of weakness maybe in the Shanghai Composite could happen. So we'll see about that. But from the technical side, look, a drop below the 23.6 on the Fibonacci retracement here. I talked about it. Would be great because I could consider some lower areas. Jumping into Dow Jones Industrial Average. So last week we had a bit of a crazy, some craziness we saw here, because initially, we saw a decline. We were, expecting Trump, the U.S. leader to invade Greenland, and then he went to Davos. Then he said that he's not going to do that, but he's going to stand next with NATO, and it was all like kind of like something like a public shaming or something moment or something. Anyway, the politics are weird. Well, they're not weird. They're trying to play chess. We all understand what they're all doing. It's just that everybody thinks that maybe your average consumer is stupid and doesn't understand anything. But anyway, we'll see how this chess game. It doesn't look like they think that they're playing chess, and I think they're like playing checkers in a way instead. Because at the moment that's how it looks. You hit and run. You hit and run. It's not like it doesn't look like a very educated gameplay, unless there's a bigger plan behind it, and then we don't know that, and most likely, but we'll see. Anyway, look, for now we're watching what's going to happen with the whole diplomacy in the world between U.S. and Europe. That's trying to get, they're trying to sort that one out. It's everything became so hypocritical, I would say, even more, it was hypocritical. Now it's even more. So, okay, we'll continue monitoring that situation in there. Looking good here on the technical side. Looks still somewhat positive, but I need a confirmation break through the 49,633 territory, the current all-time high. If we can get a nice clearance of that one, then certainly yes, I will consider some moves to the upside. Looking at the index right now, the cash index. Let me just double check. So we're seeing a little bit of an uplift, 49,100, roughly where we closed on Friday, so that's okay. So we're still above this upside line. It's a tentative upside line, don't get me wrong, but nevertheless. So yeah, we're seeing an up move here, and the question to me, for me right now is, what's going to be that trigger point? Are we going to go for a new all-time high, or actually everybody's going to be the markets are going to be so concerned that there is an issue with that, because we're seeing this activity around Japan and the Japanese potential, intervention, FX intervention, will the market actually not welcome this, but on the contrary, will take this as a little sign of fear of some sort, like that maybe not everything is that great. So we'll, again, like I said, it's an itchy subject in my opinion. We need to keep an eye on it. Every small little headline could, change the game. This week, by the way, speaking of the U.S. indices, this week we have some big companies. Let's not forget we're in the earnings season, and so we have some big companies delivering on their earnings. So yep, some military companies, U.S. military companies are delivering, like Northrop Grumman. Yeah, those guys are delivering. General Motors, that's on Tuesday. United Health on Tuesday as well. Today we have Nucor, Steel Dynamics, not made, but tomorrow is the big day when everything starts. Microsoft Wednesday, Meta Wednesday, Tesla Wednesday, so all in Wednesday. IBM as well on Wednesday. AT&T, GE Vernova, ADP company, yep, is delivering their earnings. So then going into Thursday, Apple, Visa, MasterCard, Caterpillar, Honeywell, Lockheed Martin, again another military company, right? I mean, they will probably show how great how great business it is, especially in these conditions, right? This is like, these are the so-called immoral stocks where you basically, you bet on the fact that there's going to be more conflict in the world because they're building weapons, and these weapons are going to get used where, in a supermarket or something, or where. You're building massive, weaponry, and this is like modern warfare, and you're benefiting on the fact that somebody's blowing up somebody. Anyway. So yeah, going further, yes, of course, like there's a bunch of other companies which are reporting. Friday, ExxonMobil, Chevron, American Express, Verizon, those guys are reporting their earnings. Let's see what's going to happen further, of course, but for now, I'm watching this Dow here. I want to see what's going to happen next, but for now, yeah, it is looking quite cautiously bullish, I would say, because again, I need a confirmation push up of the current all-time high on the Dow. S&P 500, now this one is trying to make its way kind of back up again, and it seems like that. Excuse me. And it seems like that it so far is succeeding. And I talked about this, and I said that, look, if we somehow climb back above the 6,900, and we climb above this this 20-day SMA on the Bollinger Bands on my daily chart, then yeah, great. I mean, I think more buyers could join in. The S&P 500 right now is trading at around 6,917 zone, so a little bit above Friday's high, so that's okay. But yeah, for now, we are being very, very, very careful. Going into NASDAQ, so yes, we're watching those tech companies delivering this week. Maybe, we will get some good numbers and we'll see this one exploding higher. At the moment, everything is pointing towards the upside. As long as we stay above the 25,000, kind of this 435, we talked about it, then yeah, I'll continue targeting the upside. For now, long story short, yep, this is what I am doing. This is what I'm gonna be aiming for. Let's see if this is gonna play out. Jumping into the German index DAX. So today we're opening, look, DAX is stuck in this little territory right here. So in between by the way, the market is open right now, it's moving, but it's stuck in between the 24,758 and 24,911. If we do clear one of the sides here, if we do clear this barrier right here, then yes, great, more buyers here could join in. Ladies and gentlemen, yes, like I said, for now, I'm playing the waiting game. The FTSE 100, similar story. Now, this one's looking a little bit more bearish, to be honest. Look at this. This formation here looks a little bit, worrying, I would say. It's struggling to overcome this 10,158. So yeah, let's see what's going to happen here. If we can drop, if we can remain below this hurdle, below this 10,158, if we do, then yeah, I'm going to continue targeting the downside. There we go. Managed to squeeze the word out of myself. DXY, very quickly. DXY 97. Look at this, ladies and gentlemen. This dollar is just getting hit. Look, I talked about this from the technical perspective. I said that if we do drop below the 98.76, then yeah, I'll go lower. I'll go for my 97.87 territory. If that gets cleared, my next target is the lower side of this little wide range. If that gets cleared, yep, I will consider further declines. In general, I think that the U.S. administration right now still needs the cheaper dollar, and all these interventions, maybe this is what it's for. So yep, for now, long story short, keep your eyes on this. Let's see what's going to happen, and certainly there is a path that which shows that potentially the US dollar could be on the weaker side. Sorry. Okay, I'm just watching some things right now which are happening in other markets. Okay, there's a crazy AUDUSD. There we go, ladies and gentlemen. Boom, to the upside. Look at this. This is enjoying the moment of the weaker dollar, and we are approaching my target. I talked about this. This is the highest point of 2024, if I'm not mistaken. Yep, 2024. So we are approaching that area. Now the question is to me, like, what's going to happen next? I mean, are we going to clear it? At the moment, I would say I am going to be very careful, because it has been a good move, and honestly, wow, it's just crazy. But I'm looking at silver right now. Silver is going to hit like 110, like as we speak. Wow. I mean, we're yeah, it's a new all-time high for silver in a way, so this is just unstoppable. Anyway, so yes, so looking at I'll pick up on commodities in a bit, ladies and gentlemen. Yeah. So anyway, yeah, looking at this picture here right now, what can I say? It's an interesting one. It's we're near key area of resistance, so let's see if the 0.6937 territory holds. If it holds, it provides resistance, maybe a little bit of a retracement back down could be possible. This is something that I think a lot of short sellers would like to see, because everybody's, I think, getting caught up in this, and it's getting weird. 110 on silver. Wow. AUDNZD, just a quick glance, the moment, yes, so this is the battle of the two here. NZD is also like one of those kind of the risk risk currencies, the commodity currencies. So at the moment, I think that the Australian dollar is winning the game against a lot of major counterparts, but the New Zealand dollar is really trying to fight back. AUDJPY, there we go. Of course, logical. Everything is logical here. We're seeing this. These talks, Japanese yen, these intervention talks. Japanese yen is strengthening, but is it is it just, like I said, a temporary solution? This is exactly what I was saying. So maybe it's going to be like a little, like I said, temporary solution in order not to do a hike for the BOJ. Maybe this is what the US wouldn't want to see, but certainly maybe not at this point, maybe a little bit later, so they would like to maybe delay this. But yeah, for now, I think we're watching this situation carefully. If this kind of these, throwing out these phrases out there into the news will help stabilize the Japanese yen, so without doing any action actually, then yeah, okay, then that's fine, absolutely no problem there. Anyway, let's have a look what's happening with other pairs. EURUSD, there we go. Weaker dollar is certainly working out well for this for this pair, and yes, we cleared my target. My target was this 1.1810. There we go. We cleared. We were staying above it. So my next target is the this downside line. I talked about it before, and this downside line is let me show you. This is my downside line taken from the highest point of 2018, and now it is a tentative line. Don't get me wrong, but we're not far from it. So why not to eventually kind of test it out? So let's see if that's going to work out or not. EUROJPY again, yes, similar story. I already talked about it, so I'm not going to pick up on this again. However, it is quite an important moment here right now. We're watching, so yeah, let's see what's going to happen there. Euro GBP, we're still stuck in a falling channel. I think that the pound could remain on the stronger side, but I think even more if the pound could continue staying on the stronger side if we do see that clearance of the 0.8645 territory right here, and then we'll go from there. Going into GBPUSD, look at this. We cleared the downside line, right? Okay, we cleared the downside line. We're nicely to the upside. I talked about this idea. I said that we're forming a falling wedge last week. There we go. Boom. On Monday I was talking about this, and we had a great run. So now I think we could slow down a little bit. We should, because this is like, or maybe, you know what, if we can just, the market is so strong, as long as we stay basically above this downside line, I will aim for this 1.3726. However, I will stick to my theory that whenever we clear a trend line, we tend to revisit it from the other side. We had, although this was a falling channel, but still the upper side of it is a downside line. We pushed through it, and then we retested it, and then we pushed again. So that's what I'm saying. I'm kind of considering a little bit of a test of this broken trend line, and if we come back to it, test it, and then rebound back up, all would be good for me. GBPJPY, again, similar story, breaking this upside line. I talked about it, and there we go. I think that there is more room for some more downside. Let's see if that's going to happen. USDCAD. Now this one's interesting. Canadian dollar, yes, is strengthening, not only because the US dollar is weaker, but also because of the oil situation, because oil has picked up a little bit in demand, and I'll jump into commodities in a bit, certainly, but keep your eyes on like I said, the whole situation with oil. If that continues to maybe remain somewhere like around the 60, a little bit above 60, then we could see USD CAD maybe pushing further south, and especially if the DXY ends up traveling to that lower side of this range, which is roughly between the 96, let's say, okay, let's round out here, 96.2 and 100.5. So it's in this little range. So while we will remain in here, we could see sideways action, but we're currently moving closer to the lower side of it. USDJPY, there we go. Of course, the big one, the big move here, from 158 or almost 159 all the way to 153. Amazing stuff here happening. You just need a few phrases from some officials, and there we go. Boom. This is how you run the market, right? I mean, nobody cares about anything. Just do what is more important to you. And USDCHF, very quickly, there we go. Oh my God, this is amazing. This is just wonderful. Look at this move. I talked about this. If you remember last week, I was warning in every my Markets Talk session. I was saying, look, watch this area. There we go, the 0.7829. Watch it. If we clear it, I'll go lower. Boom, ladies and gentlemen. Boom to the downside. Boom, we cleared this area. So long story short, for now, everything is kind of pointing more towards the downside. Where we are historically, well, we're not at the lowest lows, no. It seems like we're getting closer to that. So there we go. We got the clearance, a forthcoming lower low got confirmed, and now we're moving our way towards that 2015 level. Because if you remember, this is when the Swiss franc got untied from the euro by the SNB, the Swiss National Bank. So yeah, it was a historic moment. A lot of companies suffered. So yeah, this is when the central bank decided to allow the Swiss franc to run wild. Ladies and gentlemen, the commodity world, of course, gold. This is a monthly chart, ladies and gentlemen. Look at this. This is gold, and honestly, talk about speculation, right? Talk about speculation. This is just spectacular to watch. Where's my measurement? There we go, price range. So from the beginning of January, right, all the way to, right now, we gained around 18% on gold in a month. In a month. Sometimes you're doing that in a year. It was in a month. And look, don't get me wrong. I said it before and I'll say it again. It doesn't, how to say it, look very good. It doesn't look very healthy. It looks more like a problem to me. Whenever we're like, like you're gonna continue buying at these levels. Eventually, like if the market conditions are gonna get weaker, they're gonna go a little bit more sour. Governments will need money. You don't want to print money. You don't want to create inflation, right? But you're gonna tap into your reserves. You want it or not, because this cannot last for too long. And if you just need maybe tech companies like nvda or all those other semiconductor or like other chip makers just to suddenly report that, oh, we're seeing a little bit of a slowdown in demand. We're still strong, which they are, but we're seeing a little bit of a slowdown in demand. And that would just constantly, I think that would raise concerns. And you won't need that many conductors, and everybody will jump off from silver and gold and copper. And yeah, I think, like I said, it's a very interesting world we're going through right now. We're seeing, like I said, gold just off the charts. This is just a crazy move. This since breaking the 2000 kind of 100 level, we have just been, that was like back in kind of March of 2024. Since then, it was just non-stop. Look at this. Since this break, somewhere, okay, let's put it from somewhere here, right? Okay, 2,146 here, roughly. This is just being like 137% gain. Wow, like this is just spectacular. Congratulations to those who are holding gold. Yep, this is just amazing. But of course, we're like I said, keeping a close eye on this, and I want to say this way that if we do, go further north, where is the further north? Is it 5,500? Certainly, everybody's like I said, but at some point it will have to go down. I mean, I have been saying this for like the past few months, and it keeps on rising. So people probably thinking, okay, do the opposite of what Darius says, about gold and silver, which is, look, okay, fair enough. I always leave it up to the to the people. By the way, let's refresh here, remove all the drawings, and have a fresh look. So I'm gonna leave it up to you. Okay, we had a great run. We had a spectacular move. This move has been quite a crazy one. We're not like seeing the end to it. We're above 5,000. I talked about the 5,000 level last week. We were very close. We came close to testing it, but okay, we decided not to hit the 5,000. We decided to hit the 5,000 today on Monday. Yeah, look, I mean, at some point this will have to reverse back down. At the moment, we're not seeing that. We're waiting for it to, like I said, to make a move. So I'm gonna, like I said, I'm gonna just be very careful, very cautious at this point. I do like the idea of a downside, but I'm waiting for that confirmation. But at the moment, we're not seeing that. We're just seeing one-way traffic. However, parabolic moves like these eventually do reverse. So is it going to be now? I don't want to say no. I don't want to say that it's going to be now. I don't want to say that it's going to be maybe later or something. I really don't know. I don't have a crystal ball. So that's why I'm just kind of playing the waiting game right now. I just want to see like, okay, like what's going to happen with Japan. How are we going to have also like a drop in, or we are going to have a problem with Iran. So these geopolitical issues, economic issues, a lot of things are happening. So let's not rush into things. Okay, let's go slowly on this, but certainly it is very, very interesting. It is a very interesting period that we're going through. Now, let me look at silver very quickly. It's a similar story here. Look, silver went and hit the 110 level. Boom today. Look at this very psychological level. But let me just jump into a monthly. And since this big rally as well, since the big breakout, let me just show you what I'm talking about. So this was right here. Since this move, this breakout right here, we kind of gained 270% at least. Oh my god! Oh, sorry, no, 260. Okay, 260%. Wow. And talk about January's candle, ladies and gentlemen. Talk about January. 50% on January candle. My God. This is just like, wow, are we in a very big bubble or what? Or something? I thought December was crazy, 49%. But no, January, we're not stopping there, right? January. The question is now, are we going to see something like this in, in the next month, in February? I really don't know, but certainly I would say let's be a little bit more realistic, okay? This is just cannot like go like this on. This is a monthly chart, and the Bollinger Band is really trying to catch up. Now, this is a very historic moment we're going through because we've seen something like this happening in 2011 to 1980. Big financial problems followed, but yeah, it's an interesting moment we're living through. So just be very careful, cautious, appreciate the time, just position yourselves carefully and accordingly, and I think everything will be fine. At the moment we're seeing a sharp move away from that 110 zone. I think it was just a very psychological one. So yeah, we're seeing this move now. Like I said, the one that I wanted to really show you, and there we go. I'm going to be very happy. I talked about this ratio between gold and silver. Now, I talked about it in a few of my videos recently, last week, in one of my top news section, quick precious metal update. I talked about it here last week in the in one of my webinars here as well, Markets Talk. I also talked about this ratio. Look at this. I think I've reached my target. Honestly, like this is just, it's getting closer to the point where we're approaching that 45. This is a good ratio. It's like 45 when gold is 45 times more expensive than silver. I think that there is more room to the downside in my opinion. So, but for that, I would need to see silver actually revert, going a little bit more to the upside. So that's why I'm not in a rush right now to do anything with silver. We hit 110 psychological level, but hey, if let's say if we take out the calculator, where's my calculator? Let me just put it on the screen. So with this ratio, right? If I'm looking at something like around 41, 42, then let's say gold right now stays at around 5,100, right? So 5,100, we divide by 40, let's say 2. We need silver to be at 120. 121-ish, 120. So that's why I'm thinking that maybe silver still has, some room to run. I don't want to say anything yet, but silver is very strong right now. Gold, I can see declining, drifting lower, but hey, I'm not going to rush into anything yet. It's a very interesting period we're going through. Gold is right now, just as I'm speaking to you, is dropping quite rapidly actually, but silver is not. So, okay, well, it's like I said, this is where it confirms the idea of maybe seeing this ratio still dropping further south. Platinum, very quickly on platinum. Of course, fantastic move on platinum. Look at this, of course. Gold and silver went higher. These guys, this one is also flying high. Palladium, similar story. I think we're going to hit that 50% here, which is around 2,134. I talked about palladium on last year. I mean, in the beginning of last year, I said keep your eyes on this. Keep your eyes on the 1,250. Boom, to the upside. Look at this beautiful thing. Copper, similar story, great result. However, with copper, now this one is really, really fascinating. Look at this. This is a daily chart, and we're still, despite gold and silver flying high, hitting all-time highs, platinum flying crazy, palladium flying crazy, copper is stuck. Copper futures here. This is on the India's exchange here. So yeah, it's the MCX exchange here. So copper is not really, like, say, going crazy, going crazy off the charts or something. No, it's just stuck. It's coiling up still. Interesting, very interesting. Let's see what's going to happen. Sugar. Okay, we're moving sideways here, but I think the time will come here for sugar to shine. And I think at this point, for now, we're just observing the price action here. We're watching some key areas of resistance. Like, for example, this one here, the 14.99, sounds like a price in the shop. But yeah, 14.99. This is the barrier that I'm watching for now in the short run, and then we'll go from there. Soybeans. Yep, soybeans are pushing back up again. Nothing major here, to be honest. I think that if we do clear this hurdle here, this 10.64, 65, yeah, I think we could see a further move, north. Let's put it this way, right? Okay. I'm going to leave this one, but I'm going to mark. I want to mark this little hurdle here. This is the lowest point of January this month. Yeah. So a drop below this hurdle here, 10.22, could open the door to some lower levels. And of course, natural gas. I mean, this is just so winter. To quote a famous TV show, "Winter is coming." Winter is here, and natural gas is just flying off the charts because in the U.S. they're freezing because they need, everything is everything is very, very cold. So there we go. This is the result we are getting. There we go. Boom, to the upside. We cleared the 5.5 zone. I talked about it. There we go. Boom. And the next target for me would be here. I need to go into a monthly chart. Now look, I think we could approach this barrier here, the 6.5 zone. I think it's quite doable. And if we stall here somewhere, then yeah, I think maybe another reversal back down could be possible. So let's see what's going to happen here. And finally, ladies and gentlemen, the crypto world, Bitcoin. Oh my God, look at this. So we're seeing a little bit of retracement. So we had a move lower. I talked about it. I said if we do break this upside line, I'm leaning towards the downside. And my next target could be around the 84,440 zone-ish. We went there, at least we tried to go closer to that place, and we are seeing a kind of a reversal right now. So look, I will say it this way. If we're looking for some lower levels, then yeah, there is still a chance, especially if we do remain somewhere below this hurdle here, this 88,375 zone. If we do stay below it, then yeah, further declines here. Let me just get rid of this arrow, too many. We could remain bearish and continue targeting the downside. However, for the upside, a pushback above the 90,650, something like that, or actually even better. Let me just put it on the chart here. If we do push back above the 91,000 here, in general, above the 91,000, if we do climb back above it, great. I think more buyers here could join in. Bitcoin Cash, I'm loving this crypto. It also fell down, but it's very technical, and I do like this little hurdle here. This one right there, the 564.5 zone. If we do clear that, great. More bears. I think more bears could join in. So this is a key area of support. I need a clearance of that. If I can get that, great. I'm getting very comfortable with slightly lower levels in the near term, not in the long term, medium term, in the near term. So yes, Ripple, we're comfortably below this 1.1990, but we really don't want to let it go. we try to stick to it a little bit more. And hey, I would say this way: if we do climb back above it, I'm gonna lean a little bit more towards the upside. Yep, that's pretty much what I'm gonna stick to. Ethereum, it's looking good. We tested this little area here near the 2,775. In general, we're below that 3,000 zone. So yeah, it's. I'm not gonna say anything yet, but certainly it's an interesting area to watch. And if we do climb back above the 3,000 territory, yeah, I'm gonna get a little bit more excited with the upside. But for now, I'm watching this 2,775 territory carefully. We're the day's young, and so are we. Yeah, so I'm watching this very carefully. Ethereum Classic, I like this one actually. It's trying to climb back above the 11.31 zone. It was a good breakout here, but now yeah, it's trying to climb back above it. Let's see if it's going to stay above. If it does, then yeah, I'm going to consider maybe a push back up. Litecoin is also trying to recover. It's still trying to fight, but a little bit unsuccessfully. I think it still remains below the 69.65 territory. So there, the downside scenario is still on. Still is possible. Dogecoin. Okay, look, with Dogecoin, I need a drop below this little hurdle here. The low, basically the lowest point of December. Near the 0.1160, if I'm not mistaken. Yep, that's the case. So a drop below the 0.1160 could open the door to some lower levels. And Polkadot. Okay, Polkadot is comfortably trading below 2, the psychological 2 level. So in general, to get comfortable with Polkadot on the upside, maybe a push above 2 would be needed. So the fact that we're not far from 2, that kind of gives a little bit of a better view here. Maybe could be given us an opportunity. Could give the bulls an opportunity, but still we're below 2, and that's why concerns are still on the table. And Tron. Tron is testing my upside line. Now I like Tron, I really do, and it's testing my upside line. So if it holds. If it holds here and stays above this upside line drawn from the low of the 14th of December, then yeah, I think maybe something like this could happen. We could see a rebound and a push back up. So let's keep that in mind. But for now, it's we're on an edge. If we do break this upside line and stay below it, then yeah, I think further declines are possible. If we do drop below the 0.2936, then yes, further declines are possible, and we could go further south like this. So yeah, ladies and gentlemen, that is a wrap. Thank you very much. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. I hope you found it useful. Too bad there were no questions, but look, if anybody has any questions, then feel free to fire those. But if you don't, then ladies and gentlemen, thank you very much. I shall see you on Wednesday, but still do not forget to like and subscribe our YouTube channel for more, because I will be delivering separate little sessions, little top news sessions. So yep, keep those in mind. I'll pick up on a few maybe separate instruments, maybe today or tomorrow, but and then yeah, and then we'll go for a little bit of a more detailed analysis. Ladies and gentlemen, thank you very much, and I shall see you on Wednesday in my next little Markets Talk webinar. Bye for now.